Welcome to the Stock Group. Today, Saturday, March 19th. So let's start by looking at the Dow. You can see here, he had a good week in the Dow. So Monday was down, but Tuesday, Wednesday, Thursday, and Friday. I read somewhere yesterday, said this is the best performing week since 2020 in the market. And so you can see the Dow is up here, in a week's time, 5%. It's a good move. All right, let's look at the Nasdaq. Pretty much the same. Up 10% Nasdaq. So then let's look at our friend Russell. Actually, Russell was down on Tuesday, whereas the other indices were up. But you can see it still closed the week up 7%. So, and then let's look at the S&P overall. And pretty much the same, up 4 days, up 7%. Don't know if you all remember, but we talked about this critical 4,300 line on the S&P, and we can see we closed above that on Wednesday. It kept running. So let's look at some of the individual names. And actually, I'm gonna go with some of the small stocks first because I want to point out a couple things. And let me go to a weekly on some of these so we can see. So let's look at APPS. So you can see here that this thing has just been going down. This is from November. And again, this is a weekly chart. So you can see this is the first up week that we've had in like 4 weeks. But you can see it's bouncing off the lows. So from 30, what it got as low as $30, and it's now up to 43. So that was a huge bounce. Let's look at some of Kathy Wood's funds. Kathy Wood's, you can see this is the first week, and look in the significance here of this bar is how big it is. So again, this is a weekly bar on ARKF, and I'll go through the rest of them as well. But on ARKF, you can see here that let me measure that out. See how big that is. So up 28% actually this week alone. That's a huge move. And ARKF, let's see, G is about the same. ARKK, shucks, up 26% this week. ARKQ looks like it's up even more. What's that? Oh, it's just low. Look, 17%. So definitely a rotation back into these small cap stocks. Let me show a few others. And so if you have been holding these for a while, should got a little relief this week. So you can see this is I won't use that one. Hold on, let me see another one. Look at Chewy. This is Chewy is the pet food company, e-commerce company, up 24% this week. Good move. Look at CLSK. So look at this run, CLSK, and this goes back to actually January 24th. They bounced off the lows of $6. You can see this is up to 12. So it's a double right there, literally in 6 weeks, 7 weeks. Look at Coinbase. Coinbase have again killed. You can see this weekly bar here up 24%. So this rotation that we got now, I don't know if it's going to last, but let me go back. So if we go back here to the Russell. So remember, we talked about several times that November 8th high in the Russell, or the week of November 8th. You can see they were just going down, down, down. But we established a base in the Russell, it's 1900 level, and just been trending sideways but you can see that this week's bar, how big this candle is. It's a big candle. And again, if you look at from the highs and lows on that, you're talking 8% on the Russell. So it's definitely welcomed because all the small cap stocks have been getting killed. Do a couple more small caps. Well, let's look at Fubo. Fubo actually rebounded a little bit, not as much as the rest. But as I say that, that's not true. Just looks small. That's a 36% move off the lows for the week. So huge move there. Robinhood. This is really interesting. This is the online stock broker. You can see here, Robinhood hit as low as $10.25. You can see this week alone got a good bounce. Robinhood was up actually 31% this week. That's crazy. So definitely a rotation back into some of these small cap names. So if you have been holding them and suffering through the pain, you should have got a little bit of relief today. Well, not today, but this week. I'm trying to see another one. Roku had gotten killed. So back in November, Roku, let's see, it's October. So Roku actually topped out in October, but you can see we're really going back to July. So Roku was $490. And you can see here, hit a low last week of 102. We're actually here a little bit less than that. And so the Roku is up off of the lows 28%. So long way to go on this one for sure. But hopefully this is a start. Now here's a stock that has got absolutely killed. This is Shopify E-Commerce. They were as high, and it's not even a small cap, this is a large cap stock. But they hit that high in November. And you can see here, it's just been a long way down. So if you measure this out in terms of from high to low, we're talking down 68%. But just this week alone, recovered 50%. So if you played any on this one at the lows, you've been rewarded this week. And let's see. Don't know if you got any Tesla fans with Tesla. This week off the lows of 760 to 900. That was huge. So that's pretty much it for the small caps. Now let's get to the some of the bigger name stocks. So I pointed out a few weeks ago. Let me go back to a daily. On the daily chart here. So let me see what else. Somebody else joined. What's up, Dre? So here on Boeing hit this low of 169, and it was at the support level. You can see here it broken down through that 185, hit 169, but with this week's move is back above even that prior support. So we hit that 169 last week, and then we back up to 192. So if I measure that move out in Boeing, up 14% off of the lows. So Boeing should be good to 210. If it can break out of that, then we're looking at horizontal support here, probably in this 2.25 area. And then if you get from there, looking at 245. But I'm looking for this 225 in Boeing. Let's look at Apple. Apple actually got hit last week. Apple was down, I think, to 150. Yeah, got as low as got as low as $150. So Apple's up $13, literally in a week's time. So it's a nice move in Apple if you picked it up on the lows. Let's see. Let's look at Facebook. Facebook has been getting absolutely murdered, but I think they got a decent rebound this week. So Facebook off of the highs from this earnings of 327, got as low as 186, but you can see closed up 216. So Facebook is up $30 this week. So that's a little bit over 10%, 12%, something like that. Let's look at McDonald's. McDonald's is a offensive name, so see how they fared. McDonald's actually was, I didn't realize they hit a low back here March 10th. I don't know what that was about, but McDonald's up 20 points off of the lows. But they fared decently. Yeah, let's see from top to bottom on McDonald's. Yeah, only down. Top to bottom, only down 20%, where we've seen other stuff is down more than that, going back. Let's see. Look at Qualcomm. Qualcomm is chip maker. Mega cap stock. Off the lows of 139 to 153. It's decent. You can see here off of this support at 144, and then broke through the next level support here at 152. So it's good. Let's see. Talked about Tesla. Let's look at UPS. Actually, UPS has done well during this pullback. Got as low as 199 last week, but it's back up to 219. It's weird though, they had a down day on yesterday. Don't know what that was about, unless there was just some profit taking. But yeah. Let's look at Wally World, Walmart. Walmart did good through this downturn. But you can see here, got a low maybe 3-4 weeks ago. Yeah, February 20. So it's about 3 weeks ago, February 24th. The significant date, February 24th, that was when the Russia invaded Ukraine. So market was down. But you can see off of those lows, Russia is up. Walmart is up 45%. Not 45%, but up to 145 off of the lows of 132. Okay. All right, so you can see, let's look at some of these financials as well. While I bring this up, any questions, comments thus far?
Mike is thinking, see, now this week it went up a little bit up, but do you see that the forecast will be go up, or I hear some news that go bad as recession might come. I hear a couple of news. I just want to make sure that I understand correctly.
Yeah. So the stock market is typically a leading indicator. Now, I can't say if we're going to go into a recession or not. Typically, recession is predicated by a lack of growth. I don't think that we have a lack of growth problem. The recession probably was more stoked by the fears of inflation, because the Fed was raising rates. So I think they did raise rates this week, 25 basis points, but that's not enough to slow down the economy. I believe the bigger concern now is this conflict with Ukraine and Russia, and if it's going to pull other countries into it. That's probably, I think, the biggest threat at this point. But also, unfortunately, that's occurring. But what it has done in a positive way is that the Fed is not going to be as aggressive, on their interest rates rise, because of this war and instability. So before the war, we probably were looking at possibly a 50% basis point rise in interest rates, which, was again trying to curb inflation. But with this conflict, we got to see how these numbers continue to look. But what I will say, just looking at the Russell, what we're seeing here is that we had this huge rotation out of these stocks in November, right? But you can see a lot of buying back here. So really, from January 27th, like January 28th low, that February 24th low, you can see that it held in both of those cases. So there's a lot of buying and accumulation, in this range. So again, with the stock market being a leading indicator, I think that the risk is back on for, some of these growth stocks. And so I don't see us coming to a recession, but that could change. But if I would say the probabilities right now is no, because we still have, decent employment. Actually, we probably don't have enough workers, in the economy to fill the number of jobs there. And so, you can see that with a lot of the different industries being stressed from a labor perspective, that, they're hiring still. So I look at those things again, just the inflation is probably the biggest concern. But, we'll see how that goes. But I don't see a recession right now. But, that's my view. Others can chime in. What do you all think? No comments. I'm about to call some names. Elder Martin, tell me, have you seen much of a difference in the mortgages since the rate hike from a real estate perspective?
Yeah, when anytime the Fed start talking about going up on interest rates, price and everything just been terrible. It's right now what we had a couple weeks ago. People looking in the mid four, lower mid fours was interest rates, man. They were looking at high threes a couple weeks ago, so it's really got an impact on my business, if you get my drift.
Okay. Now, has it slowed down the number of applications that you're processing?
Well, what has slowed down actually is that there's no inventory. That's the thing that's hurt us right now. You got buyers, but there's nothing to buy, especially when you're looking in the mid to high 200s, it's almost impossible to find anything there, because these hedge funds are coming out paying cash for these houses. So it's very hard right now. Unless you're, 400, 500, 600,000, it's a little easier there. But just for the ordinary person, it's very difficult right now. Yeah.
Okay. Good. Yeah. And so that, to me, that still is, so if you look at just that, like, say the average American, buying a reasonably priced house, they're still very high. So, that is a bit of a inflation concern as well. So we'll have to keep an eye on that. But again, if these interest rates, like you say, if it's up, 75 basis points, from just a few weeks ago, that is significant, in terms of how much house a person can buy, is because it's more expensive now than it was literally, 3-4 weeks ago. So yeah, come on. So that's what I would say. Milt, you got any recession comments?
I tend to stay away from that, because normally when the Fed starts raising the interest rate, they miss.
Okay. So what if you were to place a bet on the probability of a recession, what would you give it? 1 to 10?
It's sort of strange. Most people seem to have forgotten how much money has been pumped in this economy, and it just have not evaporated. It is still sloshing around here. The odds of a recession near term is not good. No, that's not the way to put it. It is not likely.
Okay.
But you have something really negative that could happen. This is a big overhang, and that is China entering the war to help Russia. And I don't mean by sending Chinese troops. I mean, if they start sending material goods over there, like drones and stuff like that, I promise you the West will respond very negative to that. And while we can probably withstand a shock isolating Russia and just ripping it out of the world, Russia's sort of like cutting off a part of your hand, taking it out of the economy. You take China out, we're talking about depression.
Interesting. Yeah, I don't know what kind of I don't know if China is going to hitch their wagon to Putin or not. It's going to be interesting. And then I guess too, the other piece of that, will China look at this Ukraine piece as an opportunity, to bolster their efforts to go into either Taiwan or, so.
Well, on that part, I'm thinking they're seeing what the response. If anything, the Chinese plays the long game, and Russia sort of took their shot away from them. And they're probably patting themselves on the back that Russia did something this stupid, because they would be getting all of this right now. And then we wouldn't have to worry about talking about interest rates or anything. I'll be telling everybody, go to cash, get some gold in your house or something.
Yeah. Actually, I'm glad you mentioned that. Let's look at how some of the what some of these commodities looking at least commodity companies. So here's
Mike, before you get that, this is on the same subject. Before I forget,
yes, sir.
I'm sorry to interrupt you on that.
No, you're good.
The Chinese have taken their foot off the throat of their own stocks, so now they're just very risky. They're no longer, you should never even think about putting $1 near it. So that's one good thing. And this rally, I think, that's part of this rally. When the interest rate, when it finally came in, and then when the Chinese decided they're going to support their own stocks and still try to destroy them. That was another thing.
Okay. Let's look at some of those then. Alibaba, they have been getting killed. Yeah, so this was let's go to a weekly on this, give you some perspective how far this thing has fallen. From 318 October 2020 to literally 74. But look at this move. Look at this candle here. Look at this volume candle. Somebody's buying a lot of this stock this week.
You can thank the Chinese government for that.
Wow. So yeah, this is a huge move that week. Let's look and see what. So it was a lot of volume came in on Wednesday. Let's go back, see if we can find any volume to that. So the closest thing we can find when this thing was in the 220 area, 212 area from a volume perspective. And that is not even as much as we're seeing here. So yeah, because I stayed away from these Chinese stocks, but maybe it's time to look back at them. So Baba, I'm trying to think.
The one I was looking at was K-Web. I'm not going to buy any, by the way. I'm just putting that out there because I know some people were talking about that before.
Payweb?
K.
Oh, K. K-Web. Okay, I hadn't even heard this one before.
That's one of their. I think it's an ETF.
Okay.
I don't remember what.
Yeah, it looks like it is. Let's see here. Yeah, I'm trying to see let's see what's in it. Yeah. Okay, web holdings. Let's see. Okay, here we go. Top 10 holdings. Tencent, Alibaba, JD.com, Baidu, Meituan, had never heard of it. These 5 through 7 I haven't heard of. Trip.com, heard of them, NetEase, and Pinduoduo. Yeah, okay. Interesting. All right, let's go back to the chart. Yeah, definitely you can see. Yeah, it's a huge run off this lows this week. So what is this? Talking wow, 50% move just this week alone. So yeah, it's huge. Any other comments on that? China stocks.
Just remember the other risk you got if China decide to join the war. I promise you will see these things reverse in a hurry, get right back down to that bottom.
Yeah, but one thing about China though is that they can't. Well, there's another thing, a couple things actually. I don't know if y'all have heard lately, but there's a huge COVID outbreak in China and Korea. I mean, to the point where it seems like it's worse than that they've ever had. Let's see.
Yeah, some of the states they put in the lockdown. They put lockdown for some of the states.
Yeah, let's see, I'm trying to get to this map. Yeah. Okay, here we go. Map is not displaying. Oh, here we go. Yeah, so you can see here. So for China, mainland China, from March 8th to 18th, 5th to the 18th. But you can see here in Korea, 4.8 million cases over that same time. Vietnam, 3 million cases over that same time frame. So, whatever that new variant is, somehow it's gotten out and it's spread it big time. Let's see. Trying to see some other numbers right here. Yeah, Hong Kong reported about 20,000 new coronavirus cases on Friday. And I think this is as of yesterday. Yeah. So that's yesterday, Friday. Italy reported 80,000. South Korea, you're talking 621,000. I mean, this is crazy. I remember Italy got hit bad in a couple of initial things, 2020. They were hotspot, 80,000. Britain, so I would not be now that's another thing. So we go back and look at the chart. So let's go back here. Let's see if we can get, because I believe it's coming to America again. We're going to see a wave hit. Because typically when you see either stuff in Asia and Europe, sometimes they get hit before we do. So I would not be surprised if we start to see a spike in cases here in the U.S. Just based on the sheer numbers that we're seeing overseas. But if that happens and if it gets bad and we go into another lockdown, now that could be negative for the market. But Now, one of the things I did read when I was looking at that Corona stuff was they said that a big population of the Asian countries, a lot of their elderly people did not get vaccinated. And they're seeing that it got into the elderly community. And with some of these highly dense cities, that it was able to spread so easily because, you know, they're just too densely populated with people. And then you throw the elderly concern there with them not being vaccinated. And they said that's those two factors have contributed a great deal to this huge spike. So, but like I say, Korea, you know, Korea was up huge, and then Vietnam, and then mainland China itself. So something to keep an eye out there, because all this stuff. So, you know, got a lot of different factors going on right now. The war, you know, that stuff with concerns of COVID in Asia, interest rates here in the U.S. So a lot of different things in the fire. Let's see. Oh, I started to look at the banks. So let's look at Wells Fargo. Actually, March 8th, they had come back down to the support area here at 43. Let's see, tighten this up a little bit. So it was getting close to this 45 to hit 45.87. Bounced off. So it's a nice little bounce. Let's get JP Morgan. So nice little bounce there. Morgan Stanley had a really good bounce off of this 82 level. So I don't know what it was about the banks, but this March 8th seems to be a significant date. Let's look at Citigroup and then Bank of America. Citigroup bounced a little bit, but not as much as the others. And then Bank of America. Yeah, I don't know what it was about March 8th in these banks, but they got hit big time. But it's a really good move off of the lows. Talking 12%. It's a big move. Hey Milt, how did your preferreds do in Wells?
That is not really a preferred. I think it's a convertible bond. I went and did some research. I own this thing so long I don't even look at it anymore, so I forgot what it was.
Okay.
I mean, I bought that a long time ago.
All right.
It is going down. When interest rates go up, that goes down because it is a interest rate instrument. I know it sounds weird, but it's sort of like the reverse of what you would expect.
Okay, got it. But you're still getting them juicy dividends though, right?
Oh yeah. Remember when I bought it, the dividend was 17%. So I still get 17% of the original amount I put in, which I'm never selling it. I'm gonna die with that baby.
Okay. Let's see. Let's see if this comes up on the chart.
If that comes up on a chart, it would be one weird looking chart because it doesn't trade like regular stock does.
Yeah, I'm trying to see. It's short volume. Yeah.
Yeah, you won't see anything like that. There's no options on it, things like that.
Okay.
This is basically an interest play. If I could ever get in there in something like this again, I would just put all my money into, things like this across all the banks.
Mm-hmm.
That's still a lot of headline risk for just one asset, but then I just live off the interest for the rest of my life.
Right. No, makes sense. Makes sense for sure. Okay. All right. Let's see. So, what are you all have been doing recently? picking up anything? Did you pick up anything off of these lows? Particularly, let's go back to the indexes. So again, line in the sand here. March 8th, January 24th, and February 24th, 28th, somewhere around in there. So those are definitely 3 significant dates in terms of hitting lows on the Dow. Again, on the Nasdaq, February 24th, January 24th, and then even here, this March 14th was a low there. Russell, this is that 24th February, 28th January, and then I guess we hit a low here, March 15th. So what are you all doing in your portfolios? Anybody buying anything? Just holding what they have, adding to new stuff? What you doing?
I'm just not doing anything, Mike. I'm just not buying or not selling, just leaving it.
Did you still, was dollar cost averaging into the ARK stuff?
Yes, sir, Mike.
Okay.
Yes.
Yeah.
That is only the thing which I'm.
Okay. Good. I think you're gonna, it's gonna take some time for this stuff to work itself out. But there's one thing that specifically on that is that these are innovative companies, and technology is gonna, if you think about technology, is to be able to automate or improve efficiencies in the working of whatever it is that they're developing, right? And so if we continue to have a labor shortage, technology is going to be used for that. And then as growth returns, things settle down geopolitically and otherwise, companies are going to be, instituting more tech, not less tech. So I just think it's a matter of time before these things return. And once you get caught in a rotation out of what they call a risk off. So you see these 3 boxes here, particularly these first 2. This is a risk off in growth stocks, particularly small cap. But you see we base sideways here, and the risk is returning, meaning that big money is coming back in to buy these up. And so as that continues to happen, I think we're going to see a return to growth related stocks. And just keep holding. I think they're going to return to, definitely to some better values than what we've been seeing recently.
Got it, Mike.
Yeah, man. Let's look at, and we talked a little bit about the, before I get there, rest of y'all buying anything? Y'all holding? What you doing? Everybody don't speak at once. All right. Be like old school classroom. I have to start calling names. Andre, I know what he's doing. He's still in that Fubo. Yeah. I think Andre, it knows that Fubo. I need to look. I think those options, I don't know if they expired this week. Hold on, let me look. If they expired this week or they will be expiring this coming week. But whatever they do, we'll put some more on, try to gain some more premium to fight back. But got to bounce off of this $6 area, and it almost hit 8. Well, it did hit 8, but it couldn't close above 8. Close at 792. So it's gonna be interesting to see there. Dick, what you doing with your portfolio? Adding anything this week or not?
I added a little to what was that? Coca-Cola. I've had Coca-Cola I've been having for years. I added a little bit more to that this week.
Okay. All right. Yeah, that's a good move. Coke is up off the lows of March 10th. Let's see. Off of these lows, literally in 2 weeks, Coke is up 4%. And it don't sound like a lot, but Coke is It's not a growth stock. It's a stable piece. And let's look at something on that Coke. We'll look at what these dividends pay on Coke. So you're getting a 44-cent dividend quarterly. Yeah, quarterly 44. So it's that 120. Yeah, so say 120 over. Is that 50, over $60? Getting a 2% yield on that. It's decent. Big, do you reinvest your dividends on Coke? Or do you know?
Yep, I sure do.
Oh yeah. Good stuff.
Yep.
Good stuff. Yep. And I'll tell you, anybody that have these dividend stocks. Now I know Milt, I think he takes the cash out on his preferreds for Wells Fargo. So if you're trying to generate income, you want to use the cash. That's one way. But if you rather have the stock, I would tell you to reinvest your dividends, particularly if that stock is performing well, so you can get more shares. So, Milt, what you're doing this past week?
Because of work, I have decided to just rotate everything. Either the stock I own, I'm just staying put. Everything else I rotated out to 2024, except for one Tesla, which I'm doing a short term on it. Besides that, I'm just staying pat because I have a little too much stress on me right now to, really go out and hunt for something.
Okay. Understood. In terms of Teslas, I've been following this a lot recently. This thing off the lows of 759. It's moving like a madman. So what I've done during this whole ride down on these, let's get back to small cap, on this Russell, I got killed in my small caps, but I was determined not to sell them. So I added to several of what I have. Let me look here. Pull it up on my phone. So I'll tell you what I did. So I bought Fubo on the way down. So got that. Rotated out of, had some cash sitting on the sidelines when Google came out for that 20-24-1 split. Unfortunately, I rushed in too early. I bought up near the highs. And so I just been continually adding to it to try to fight back on the bad purchase because I was impatient. I didn't know they was going to get caught in all this geopolitical news, but continue to add to my Google. So I got a position in Google that I added. Had some Beyond Meat. Let's see, Beyond Meat, I started buying it at the $84 level. Bought some more at 65, some more at 64. Let's see, Beyond Meat. It probably should have went back in at this 35, but I ran out of money. Let's see. Got a little big lot at $50.81. So bought some of that. Still underwater on that one, but I don't have much of that at all. Here's one that I've been holding for a while, and I added to this on the way down. And actually, Square. So remember us talking? Let's got a couple. Let's look at PayPal, Square, Visa, and Mastercard. So you can see here, Square has gotten killed again. Going back to July, Square hit a high of 308. It's gotten all the way down to 98, right? So it's brutal on that return. However, let me see what I started buying Square at. Because let's see. So I started buying it on the way down. So I bought at this support level right here at I bought a little bit lower at 182. Bought some more in this 160 area. Added some more at 130. And added some more at 106. So, but you see Square has been getting killed. But again, this is where this risk growth trade is coming back. So Square did pretty well there. Oh, I'm sorry. And I'm talking Square, but I'm on a PayPal chart. Sorry about that. So not that much difference. Same looking chart from 270 down. And so you can see hit a low here of 83. Came out with earnings, got a good bounce here on this earnings to 130. Pulled back from 130 back down last week to 92. But you can see we bounce off this 92 back to 140. So Square has a lot more. And I think long term, Square is going to be okay because they're leveraging, and actually they changed the name. They're not Square anymore. They're called Block, and so they have a cryptocurrency focus as well as digital wallet. You know, and they're the Cash App makers as well. So if you use Cash App, you're actually using this company's product. And so they're in the e-commerce space as well, money transfer. And Bitcoin. You can buy Bitcoin through the Cash App as well. So they're in those three businesses. So now let's look at that in comparison to Mastercard and PayPal. So you can see here, it's Mastercard. Mastercard did well coming off of these January 24th lows, but they couldn't sustain them. So you literally had 2 weeks where it was off of 320 to 400. It was a huge move. But come February, this thing just got caught in all this bad news and hit a low here on March 8th. But off of the March 8th lows, up, what's that? Let me measure that out. I don't even know how much that is. Let's see, 302. So you're talking up 14% literally in 2 weeks. So that was a huge move, and we talked about this last week. That was that one. And let's look at Visa. Visa's chart probably pretty similar. Yep, March 8th. This news. So it's something related to financials because we saw this in the banks. This March 8th day. I don't know what it was with financials, but they got killed. But here's a bounce. So Visa, good company. Mastercard, good company. So, you know, looking at those, and I wouldn't, even though they're kind of in the same space a little bit. Visa and Mastercard definitely are in the same space, but not necessarily so much so with PayPal and Square. They are, but they're different. And if you're looking for a more stable of the two, if you want to play this class, I would say Visa and Mastercard are much more stable than Square and PayPal. But Square and PayPal may have more upside, considering where they are versus in their current uptrend from where they started from, considering that they dropped from those lows back in November. And let's see, global payments. This is a company that Vanessa I think she works for, and they do payment processing for e-commerce and credit cards and stuff. You can see here that said March 8th low again, so I don't know what it was on that March 8th low, but up. So I had some Square that I added to, just trying to fight back from some of those gains. We talked a little bit about Boeing, picked up some Boeing on this. I don't know what this bad news here on Boeing, but I picked up some somewhere in this range. So Boeing, and for this one, it's going to be a trade. I'm looking at, I think I showed earlier. I want to get back to this 218, 220 level, but this is a trade for me. Unless it's a trade right now. I don't know. Just gonna see how things continue to prove. Coinbase. Bought some Coinbase on the way down. Let's see. Yeah. So bought some Coinbase in this 225 level. You can see it didn't hold. Got as low as 150. Didn't buy any down at the 150 level. I think it got some in the one. Got some right in this area, 185. So added to the Coinbase. Let's see what else. Oh, I talked about I bought some of this Robinhood. So you see Robinhood here got absolutely decimated off of the lows. So Robinhood was let's go back. This is November. Robinhood was a $36 stock. It hit 10. So bought some on the way down in Robinhood. Let's see what else. This one I bought too high, but I didn't know this stock was going to do what it did. So I was in Shopify, and I knew that Shopify was a good company, but I didn't anticipate this rundown. Shopify was $1,700 back in November, and it's got as low as 500. So that was, it's a crazy move to the downside. But start picking up some of Shopify in the sixes. But you can see we got down lowest here is 512. So Shopify's a good company actually, but it's a good bounce here. Again, we got this rotation back into some of these growth names. So I think Shopify is going to be all right. So multi-billion-dollar revenue generating company in the e-commerce space. So I think they're going to be good overall, but I'm just in some pain until we get back to some higher highs. Let's see. And the last one is, well, I get y'all, this one's a little minor stock that they do rare earth metals. It's just a little penny stock. So, but I've been following this one for probably 10 years or more. So picked up some of this, looking to see if we can get back up to this $2 level, $2.40. But you can see here, if it gets on a run, that if we can get back to that 350, 465. And this will be a play on EV, because they mine a lot of the rare earths out of they got a facility and own a bunch of land in Texas that have been identified to have a bunch of rare earth minerals in it. So last one is so what I try to do here as well. So you heard me talk about so I knew that these small caps were getting killed because there was a rotation, talked about specifically from this November, and they rotated out and they started. And so when this rotation was happening, there was a rotation out of the growth stocks, small caps and growth related stocks, high PE, over to more of the defensive names or stable low PE companies. So if you look at Apple, so Apple is a low PE company, even though they still grow pretty well, but Apple's PE is 26. So that's low, right? So rotating out of the higher growth stocks so I got some Apple, bought some Microsoft. I'm trying to think I ever owned any Microsoft, which is ironic because I'm in IT. You would think I would have bought some before, but bought some, so look at the PE on Microsoft, 31. Got this Google, PE on that is 23. So these are big tech companies with good revenue streams and more value plays than some of these higher ones. So in this downturn, rotating into some of those was something that I did as well. So that's my update on what I did. Thanks for joining, Barry. Hey, we just went through, Barry. What were you doing kind of in this last few weeks? Have you bought anything? I know you're doing some trading, but have you bought any long term or trades, or what are you doing?
Okay, Mike, I'm over here with the kids. No, I did do a little bit this week, but I had put some stops in, so they kind of sold it off.
Okay.
And so it kind of messed me up, you know. I did a trail stop.
Okay.
I wish I would have just kept it, but you know.
What were you? So you just pretty much just trading?
Yeah, I was doing some trades. I did Apple. I did Voo. What else? Microsoft. And I don't know what day that was. I want to say that was Wednesday. And somehow everything was just going up. Yeah. Then all of a sudden, I think I had to leave for a minute. And I put a trail stop like 2%. And next day, you know, everything sold off. Yeah. But yeah, I would say that there's definitely a rotation. We talked about a little bit earlier, but there's a rotation into some of these growth names. And so the buyers are coming back in. So, you know. Yeah, I had some Netflix. What else I had? PayPal, Square. They went up. Oh yeah, they went up, and then the next thing you know, they sold off. I don't know.
Yeah, you may have just been early because if you'd have stayed in, because they had a huge run. So this is Wednesday, Monday, Tuesday, Wednesday, Thursday, Friday. So Square was been killing. So it's $95, you know, on Tuesday, you know, and closed at 140. So
I probably should have put the trail stop at 5% instead of 2%. So it probably went down. Okay. Yeah, I had a trail stop.
Oh, okay. Yeah. You gotta widen that up.
Yeah, I had a trail stop at 2%, and it went down probably 2% because I didn't know how the market was going to go, and I had left for a second. So I said, let me put a trail stop on all of them for 2%.
Oh yeah.
So I probably need to go 5% now, man.
Well, are you just trading these just to trade them, or are you trying to, you know,
hold them?
Yeah, or are you trying to hold them?
No, I'm just doing swing plays.
Okay, got it.
But I mean, yeah, I wish I would have held on that Voo.
Oh yeah,
at 386.
Oh no, that Voo been. Oh my goodness, yeah. Oh, that Voo been rocking too. But it's just S&P. You look at, you know.
Yeah, the S&P 500. Huh?
Yeah. So yeah, but you know they've done well. We're good.
Yeah, this week.
Yeah. All right. Any other comments, questions, any financial, anything? I know. So last week we talked a bit about those videos. I don't know if anybody got a chance to watch them or had any other commentary. You know, so you know, any follow up, any more insight there?
Oh, last thing, I know I came in last. So do you think because the Fed raising the interest, the reason why the stock market is starting to go back up? Well, yes, but not necessarily for that reason. My guess is because got that uncertainty out of the way. Go ahead and get that priced in. The market had been anticipating, but they just needed the confirmation of that. So yeah, I think that made some some difference. But then I think too is just that the you know, I don't know how much worse the news can get than where we are now. You know what I mean? Now, like again, unless you know, US get pulled into this conflict with Russia and Ukraine, that's probably news. You know, that's some worse news. But if that doesn't happen, I'm not sure what the worst news, you know, will be than what we currently, you know today, right? So inflation is up. You know, we know that they did a 25% basis point move in the Fed. I think they're going to continue to monitor what goes on with this war and stuff.
and to see what happens there. So as long as the Fed stays put, in just terms of keep watching, and they may do another rate raise this year, but I don't think they're as aggressive as they once were because of the war. And so we'll still have to keep monitoring the numbers in terms of consumer price index, food prices, gas. Now that's one thing we didn't even talk about. That. Let's see. Let's look at some of these gas oil companies. So actually they got a little bounce. Some Marathon. Let's look at Chevron. I always get Chevron wrong. Yeah, CVX. Never can remember that. So they pulled back off of those highs of last week. So you can see they down for the week. Well, actually up for the week, but pulled back from last week's highs. So, but this gas, I think I filled up yesterday. It was like $4.20, which is crazy. So I don't know if they're going to be able to, continue to extend that run.
And Powell did comment about he expecting a recession. Is that?
Yeah, actually, Kamal had asked a question earlier. I don't see us going into a recession personally. He may have just talked about it just to spook the market, but I don't see a recession. I think more is gonna have to happen because you got to think we still got really low unemployment, right? And you got companies out there that are just hiring because they can't find enough workers to fill these positions. So from a business perspective, that's a good thing, and so that's not inflationary. It's just only the only thing is because they're having to increase wages because the labor market is so tight. They probably are passing on a lot of those prices to consumers. So with that, that is some inflation there. But you got rising inflation based on growth as opposed to, recession just means you got, negative growth, stagnant or negative growth. So I don't see us going there. So I think the only thing is just how this inflation is going to, rear and how, if it's going to get worse and what the Fed is going to do to kind of address that. But I don't see a recession, but I could be wrong. So,
all right.
Yep. Yeah. Come on, so they had to drop. Let's see. Any other questions, concerns, any comments from the videos that we didn't discuss last week? Did you watch? Oh yeah, Barry. I remember I sent those videos to you, so I know you had watched them before. Okay. If that's nothing else, then we'll close it up here. Going once, going twice. Any more questions? All right. Well, good. Thanks for your participation as always. Just keep doing your charts, looking at your watch lists, and see what the market does in the next week. We'll do it again. Thank y'all. Y'all have a good one.